The atmosphere has started to build for the budget in February next year. All eyes are on the budget and what has become cheaper, what has become costlier, how much concession has been given in personal income tax, and so on. There is a lot of curiosity among people to know this. The budget is still far away, but the discussion about personal income tax is in full swing. This is due to the reports of abandoning the new tax system and the old tax system being attractive. It is being said that the government is contemplating to abolish the new tax system. First of all, understand the math behind the tax in the new and old tax system. A new tax system was introduced in the Union Budget 2020-21. In this, people got the option to pay income tax at a lower rate, but at the same time, most exemptions and deductions were also abolished. Now the government is considering to abolish it. Earlier, a review of the new tax regime was proposed. Actually, despite the reduction of tax rates, the new system proved insufficient in attracting the taxpayers. Let us know about the new and old tax system. In which system, how is the tax calculation done, and how much income is not taxed? Why are the taxpayers liking the old tax system? The old tax regime is popular despite being complex. The reason for this is the method of reducing tax liability despite the high tax rates. Many clauses have been added in the Income Tax Act which give taxpayers about 70 options of exemptions and deductions through which taxable income can be reduced and less tax needs to be paid. Let us understand this with an example. Suppose the total income of a person is up to 5 lakh rupees. In such a situation, due to the exemption under Section 87A of the Income Tax Act, he will not have to pay any tax in both the tax regimes. Tax is levied at the rate of 5% in both the systems. In the old tax regime, the tax liability of most such taxpayers becomes zero as they can claim multiple deductions and exemptions. The biggest means of deduction is Section 80C. Through this, taxable income can be deducted up to 1.5 lakh rupees. Also, there are other options as well like interest on home loan and education loan, including health insurance premium, HRA, LTA, and so on. It is being said that the government is working on a plan to make the old tax system more convenient and attractive. Tax expert and chartered accountant Vinod Rawal explains that in our society there is a custom of savings. We don't just save for old age, but due to being linked to tax, we also take advantage of tax saving. The new tax system says that you need not save tax but pay less tax. This system does not match with our basic culture and so the taxpayers did not accept it. To make the old system attractive under standard deduction 80D, the limit of deduction for medical insurance can be increased. For whom is the new tax system beneficial? Rawal explains that the new tax system was brought in keeping in mind the younger generation who want to invest money in the stock market or any other place instead of tax saving schemes. Instead of investing the money in a lock-in scheme, such taxpayers prefer to invest it in options that give higher returns.